Once again, I welcome you all to tonight's session. You know how we do it. Our focus is on the major currency pairs, the 7 major currency pairs.
Okay.
So we'll start with GBP. I have to meet you all now, okay? When I'm done, I will meet you guys so that I can take your questions. Okay?
Okay. Okay, sir.
Few minutes, let me notify others. Okay, so we'll start with GBP USD. Now, as you all know, the forex market is dynamic. It's a dynamic market. And that's why it's very important that you keep learning. Learning never ends in this business. You have to keep learning, and that is the essence of this weekly session and daily session. Okay, it's just to educate you, keep you informed. Okay, so since we know trading is dynamic and we know it's a game of probability, it's very important that we learn how to manage risk. Very important. If you don't know how to manage risk, you'll keep losing in this business. Nothing is 100% guaranteed in this business. There's no strategy that would generate 100% winning rate. That strategy does not exist. When building a strategy, if your strategy can produce 50% win rate, if your strategy has 50% win rate, it's a good strategy. All you need to apply to make that a profitable strategy is a good risk reward. That's what you need to apply to a strategy that gives you 50% win rate, that has 50% win rate. Okay, so please, as you trade this week, ensure that you apply good risk and money management. I could tell you the setup for this week on an instrument is sell. Maybe by Wednesday or Thursday, the trend changes. Okay, so it's very important that you know how to analyze the markets. Okay, very important. When the trend changes, you have to adjust. You have to adapt. Okay, very important. So let's start with GBP USD. Please, Showboy, can you off your camera? Off your camera, please. So what do we have on GBP USD? Let's start from the weekly. Okay, the month just ended, right? So let's start from the monthly time frame. So on the monthly time frame, you would agree with me that what we have here is a bullish setup, right? This is a bullish setup on the monthly time frame. Last month's candle closed as a spinning bottom. So we'll conclude that GU is bullish if the current month's candle closes bullish. If the current month, that's the month of November, if it closes bullish, then we should expect more bullish move on GBP USD. Now, based on the formation we have here, we cannot conclude that GU is bullish. It is after the close, the current month candle, we can conclude that GU is bullish, okay? So let's go down to weekly. Because if you look at the monthly chart now, you would see that price just hit a previous resistance. Can you see it? Support stone resistance. So it's possible for price to pull back from that level. Can you see that? This was a previous support, which became a resistance after this candlestick broke out from that support. You know, when the support is broken, that support becomes a resistance. Okay, so it's possible that price will pull back from that resistance. As you know, two things happens when price hits a resistance or a support level. It's either price will pull back or break out from that resistance or support. Okay, so that's what we have on the monthly at the moment. Price just hit a previous support stone resistance. So let's go down to weekly. What do we have on the weekly? Last week also closed strongly bullish. It closed bullish after the formation of several bullish reversal pattern. We had an hammer here, had the inverted hammer, spinning bottom, inverted hammer. Can you see that? So we had a strong bullish candle last week, which indicates that there are more buyers in the market, right? It indicates that there are more buyers in the market. Okay. The way I also see it, it could also be that what they did last week was to hunt for the stop losses at this level and this level. That could be what played out last week. Okay. So many will see this and jump in and start buying. And it could just be that they hunted for the stop losses at this level. Okay. So we need to wait for, we could wait for Monday candle to close to know if price will be rejected from that resistance. Okay. We should wait for Monday candle to close. And if you don't want to wait for Monday candle to close, as you can see, this is daily, right? At this point, you can see the resistance level here. We have another block here, right? This is another block. So it's possible price will pull back from this zone. This is the zone you should look out for. The candlestick formation in between this zone would determine if we have to sell or buy. If a 4-hour candle closes above this zone, then we should expect more bullish move on GBP USD. If a 4-hour candle closes above the zone, but if there's a strong rejection from this zone, then you should consider selling. That is, if the next candlestick closes bearish, that is daily. If it closes bearish, then we should expect more bearish move on GBP USD. Let's go down to 4-hour. So you can see on 4-hour, what candlestick formation is this? This is a doji. Can you see this? This is a doji, which indicates change in trend from bullish to bearish. Can you see that? Now, if the next candle closes bearish, I would be selling GBP USD. If the next candle closes bullish, preferably it should close below the low of this doji. That is when I will consider selling. Okay, that's when I will consider selling. Now, if the next 4-hour candle closes below this, the low of this doji, I believe it will create a fair value gap on maybe 1 hour time frame or 15 minutes time frame. So I wouldn't just jump in and start selling when the 4-hour candle closes below this low. I would wait for price to pull back into that fair value gap or an order block before I would sell. I hope you get that. I hope you get that. Let me unmute someone so that I can be getting feedback to be sure you all can hear me.
It's clear, sir.
Someone. Who is that? Mr. Emmanuel. Okay, please leave your mic open. Mr. Emmanuel,
Right.
leave your mic open. There's no noise at your end. Okay, so that's my take on GBP USD. The time frame I use for analysis is daily and 4-hour. Since I have this on 4-hour, this tells me the trend is changing from bullish to bearish. Okay, so I'll be looking for sell opportunity on GBP USD. As we saw on the monthly, the trend is bullish on the monthly. So if we are selling, it's likely we are trading against the long-term trend. Okay, we'll be trading against the long-term trend if we are selling. But like I said, before we conclude that the trend is bullish, we have to wait for the monthly candle. That's the candle for the month of November to close before we conclude that it is bullish. But based on the strong bullish move, this strong bullish move we experienced, that was on Thursday, Friday, I believe there will be a pullback because those who bought and have made profits would want to sell, right? They would want to sell. That is trading psychology. Those who bought, they're in good profit, they would want to sell. And as they start selling, price will drop. Price will drop. Okay, so you can see I said we had, this is an order block. This is an order block. And you'd also see that we had a fair value gap here on 4-hour. We had a fair value gap here on 4-hour. And if you go to, please let me delete all these lines. If you go to lower time frame, let's go to, at this point where we had this order block, let's go to 15 minutes and 5 minutes. Or let's go down to 1 hour first before we go down to 15 minutes and 5 minutes. So you can see on 1 hour, we have another block here. So it could be that they just want to fill this gap. And see, price is in between these levels. Can you see that? So it could be that they just want to fill this gap before pushing price down. That's my take on GBP USD. That's my take on GBP USD. You can see price is in between these levels. So let's go down to 15 minutes. What do we have on 15 minutes? Okay. So on 4-hour time frame, I would apply my vertical line, go down to 1 hour and 15 minutes, identify support level. On 1 hour, this is support level. If 1 hour candle closes below that support, that's a sell for me. see it's a support also on 15 minutes. We also have a support here. So if 15 minutes and 1 hour candle closes below this support, I will take a sell trade on GBP USD. 15 minutes and 1 hour candle must close below this support zone or a demand zone before I will consider selling GU. Okay, let's move to the next pair. Australian dollar USD, as you know, is positively correlated with GBP USD. So if you're looking for sell opportunity on GU, you should also look for sell opportunity on Australian dollar USD. As you can see, also on 4-hour time frame, what we have is what? Doji. Similar to what we have on GU. You can see Doji. Let's go to daily. Then weekly. So everything looks bullish. Last week candle closed on strongly bullish, but you can see we had several stop losses at this level. So it could be they just swept liquidity at these levels. If you go back here, you would see that we had the previous support here, which has become a resistance. Price tested that support, tested that resistance, and there was a rejection from that level. You can see that. Okay, you can see that. So it's likely price will pull back from this level. I would not advise that you buy Australian dollar USD or GBP USD at the current market price. It does not make sense. It will not be wise to enter buy, because Australian dollar USD has already done from this point. Let's assume you executed trade at this point. By now, you would have made over 186 or close to 188 pips. So if you didn't enter the trade from this level, this is a spinning bottom. This is where you would have entered. After the close of this spinning bottom, you would have entered buy. So if you didn't enter buy here, why would you want to buy at this point? It does not make sense, right? It does not make sense. Those who bought and have made profit, they would want to sell. They would want to sell. And if they are selling, price will drop. So if at all you're considering buying Australian dollar USD, you should wait for price to pull back to a discount level before you buy. If you are buying at the current market price, you are buying at premium price, which is too expensive. The risk on that trade is too high. Okay, so you can just apply from this, apply your Fibonacci, take it from swing low, swing high. So price is currently at premium. For you to buy Australian dollar USD, price should pull back to at least equilibrium or below equilibrium before you consider buying. The only reason you would want to buy Australian dollar USD at the current market price is FOMO, fear of missing out. That's the only reason a trader would consider buying Australian dollar USD or GBP USD at the current market price. Okay, so if you are seeing buy on the chart, wait for pullback. Because if you are entering this trade at the current market price, this is the reasonable place to set your stop loss. Are you willing to take this risk? 237 pips. So if you are risking 237 pips, what will be your TP? So if you are trading with risk reward 1 to 2, and you are risking 237 pips, your TP will be around 470 pips. How long will it take for the market to give you 400 and something pips? It will take weeks. Are you a swing trader or a day trader? Now, another thing you need to understand as a trader, there's a difference between investor, being an investor, and a trader. An investor is a long-term trader. A trader is one who wants to take advantage of price fluctuations that occur in the market on a daily basis. That is the difference. Because when you analyze the market, sometimes you analyze the market as though you are an investor and not a trader. A trader wants to take advantage of daily price fluctuations. That is who a trader is. So you should not be looking at what will happen or predicting what will happen in the next 2 months, 3 months, unless you are an investor. A trader should work with daily. The time frame you should work with as a day trader or as a trader, weekly, daily, 4 hour, 1 hour. Weekly, daily, 4 hour, 1 hour. If you are experienced, you can use 15 minutes, 5 minutes, 1 minute. If you are experienced. But if you are new to trading, please don't look at 15 minutes, 5 minutes, and 1 minute. Just trade with daily, 4 hour, and 1 hour. Okay, so that's my take on Australian dollar, USD, and GBP USD. The next pair we'll be looking at is, let's look at JPY, USD JPY. USD JPY. So we'll start with it. Let's look at the monthly. Okay, you can see what we have here. Okay, the month just started, so we cannot decide based on the current month's candlestick. But last month's candle was strongly bullish, and it closed above this resistance level. It closed above this resistance level. So it was a breakout from resistance. And when there's a breakout from resistance, what happens? Price is likely going to retest that resistance has become a support. So we might see price hit this support level. So when price gets to this support level, we look out for the candlestick formation around this level. That is when we decide to buy or sell. At the moment, it is not bullish, it is not bearish. But when price hits this support, we'll see how traders will react to price at this level. So if price hits this level and we have hammer engulfing pattern, double bottom at this level, then we should consider buying USD JPY. Let's go down to weekly. So you can see last week candle closed as a doji. It closed as a doji, which indicates change in trend from bullish to bearish. Okay, so let me apply my vertical line on last week. Now, after the close of this candle, I believe a support was created on 4 hour, daily, or 1 hour time frame after the close of this weekly candle. So I'll be going down to lower time frames to identify the support. If a candle closes below that support, one could risk selling. If a candle closes below the support on lower time frames, one could consider selling. So let's go down to daily. What do we have on daily? Okay, so this is what we had on daily. Okay, so this indicates bearish, but remember we have this support. So when price gets to the support, like I said, we'll see now this is the support on daily. Okay. This last week support on daily time frame. So if 4 hour closes below this support, this is your demand zone. So if a candle closes below this demand zone, you might want to consider buying. Sorry, sell. That will be selling if a 4 hour candle closes below this support level. Now they could also push price below this level just to get a lot of retail traders to sell, because that's what we're being taught. Now when a candle closes below your support, you sell. So they might just want to push price, ensure that the candle closes below this support so that a lot of retail traders will jump in and sell. So you patiently wait for the close of the candlestick below this level. If the candle that goes below this level is an hammer or engulfing pattern or doji or spiny bottom, it's most likely price will continue in its bullish direction. Okay. So if you are selling below this level, you can just set your stop loss few pips above this demand zone, so that if the next candle pulls back and closes above this zone, you will know that was the first breakout. So you exit the trade immediately, and you could look for opportunity to buy. Okay, I think that's the only way you can know if a breakout is false or valid. Okay, that's the only way to know if a breakout is false or valid. It is false if after the close of the candle below this zone, the next candle pulls back and closes above that zone. We could say that's a false breakout or fake out. Okay, so that's my take on USDJPY. Let's go down to 4 hour. What do we have on 4 hour? Good. Okay, this is what we have on 4 hour. Now there's this indicator I use, the zigzag indicator. If I apply the zigzag indicator on 4 hour time frame and it is below this candle, there's a high probability that price might continue going up. If I apply the zigzag and the zigzag appears below this candle, then I would be looking for buy. Let me apply the zigzag. So there's zigzag below this candle. This confirms change in trend from bearish to bullish. But like I said, it is possible they want to push price to this zone. So if I decide to buy USDJPY, my stop loss must be few pips below this level. And I think that risk would be too high. From this point, let's assume I enter buy from this point. That's about, I'll be risking close to 100 pips, and I don't take such risk. My risk does not exceed 40 pips. So I will not take such risk. But that would have been the best place to set your stop loss. So with what I have here, I would be looking for buy opportunity this week on USDJPY. Yes, they might want to hunt for stop losses at this level because they know a lot of retail traders would have jumped in and start buying. So they might want to hunt for the stop losses at this level. Also, we have stop losses at this level, pending orders at this level, and they might want to hunt for those levels before they push price up. Okay, so we'll see how it plays out on Monday. Okay, which other pair? Let's look at one or two more pairs before we end the session. If there's any pair you want us to look at together, just drop it. So let's look at gold. So let's see the monthly chart. So gold has been struggling to break this resistance. It's been struggling to break this zone. And okay, this is the current month candle. We cannot make judgments with the current month candle, but last month's candle was strongly bullish, but it couldn't break out from this supply zone. It could not break out from this supply zone. There was a little rejection from that zone. So let's go down to weekly. So last week candle closed as hanging man, which indicates change in trend from bullish to bearish. So this week, I am likely going to be looking for sell opportunity on gold. Now, after the close of last week candle, a new resistance was formed. So if I would buy gold, this resistance should be broken. That is when I will consider buying gold. This resistance should be broken. Now, after the formation of this Angeman, I believe if we go down to daily, 4 hour, 1 hour, we'll be able to identify a support. Okay, we would identify a support, and for me to sell, that support must be broken. That support must be broken. I use support and resistance for entries. I use candlestick formation to define the direction of the market. Candlestick formation structure. Candlestick formation and market structure is what I use in defining the trend of the market. And my entries is done with resistance and support. Before I would buy, price must break a resistance level. Before I would sell, price must break a support level. So let's go down to daily. Now going back to weekly, you would see on the weekly time frame, we have a fair value gap here on the weekly. This is a fair value gap on the weekly time frame. I believe you can see that. You can see that. That is the fair. Let me delete this line so that you can see the fair value gap. I believe you can see that. Can you see that? So it's most likely they just filled this gap. Can you see that? So there's a probability that gold will sell this week. There's a probability that gold will be bearish this week. Anything that makes price break this level, this is on 1986.05. If the candle closes below that level, I would expect more bearish move on gold this week. Let's go down to daily. Like I said, I need to identify the support on daily or 4 hour time frame. Okay, so on daily, this is the support on daily. You can also see how Friday candle closed. This looks like a shooting star. After price tested this resistance, can you see it? After price tested this resistance, you can see that rejection. And if you go back here, we had a support here, which became a resistance. Can you see it? If you go back here, you can see this level is a strong resistance level. Can you see that? It's a strong resistance level. So last Friday candle closed below that zone. This is also a strong indication that sellers are showing up in the market. Sellers are showing up. So after the close of last Friday candle, let me apply my vertical line on that candle. Go down to 4 hour. What do we have on 4 hour? Okay, so we had a support here on 4 hour. So I'll be working with this zone. This is the zone I'll be working with. The daily support, 4 hour support. So if the 4 hour candle closes below this zone, that is when I will consider selling. As you can see on 4 hour here, we already have confirmation, right? We have a candle that looks like a shooting star, right? This is a shooting star. And because this candle is a shooting star, a bullish shooting star, you can't just jump in and start selling. We're supposed to wait for the next candle to close bearish. And you can see the next candle after this shooting star closed bearish. So on 4 hour, there's a strong indication that sellers are showing up in the market and one can risk selling. Okay, but I wouldn't want to jump in and start selling. I would patiently wait for a candle to close below this zone. As you know, Monday markets or price action on Monday most times is very erratic, unpredictable, right? Because most of the big financial institutions on Monday will just observe, see what retail traders will do. It's on Tuesday, they will come into the market. Okay, so you might just patiently wait for the close of tomorrow candle or wait for 4 hour candle to close below this zone. That's my take on gold. So I would be looking for sell opportunity on gold. Now let's go to daily. I don't use indicator, but sometimes I just, for those who are new to trading, sometimes we just use indicator to simplify things for them. So let's go down to, let me just apply stochastic. You know what we use the stochastic indicator for? To identify overbought or oversold. For me, I think gold is overbought at the moment. I've not applied the stochastic indicator, but I think it's overbought. Stochastic will be at overbought level. Let's just apply it and see. Where's the stochastic? Okay. So you can see it has been at overbought at this level. And you see the price kept on going up before we had this bearish formation. And you see that. So let's go down. Let's see weekly. You can see weekly also. Can you see the weekly? This weekly confirms it. Price is at overbought. We also, stochastic is at overbought level, and we have hanging man. You can see we have hanging man, and we have stochastic above level 80. So this confirms that the trend is bearish, unless this resistance is broken. That is when we will consider buying. But as it is right now, this is a bearish setup because the stochastic and price action, which is candlestick formation, are in confluence. There's confluence between these two, between the stochastic and the candlestick pattern. I hope that is clear. So, which way? USD-CHF. Okay, let's look at USD-CHF. As you know, USD-CHF is negatively correlated with with Australian dollar USD and GBUSD. Okay, so if we're looking for sell opportunity on GU, we should have a bearish setup on USD-CHF first. But let's see the charts. Let's start with the monthly. So this monthly, this is a bearish setup on the monthly time frame. Last month closed as a spinning top, right? Spinning top, and it's been bearish this month. Past few days has been bearish. Okay, so let's go down to weekly. What do we have on the weekly? Okay. Last week candle closed as I call this shooting star. Okay, shooting star, right? It closed as a shooting star. So here's my take on, I believe after, excuse me. What do we have on daily? Okay. So we had a resistance here. So this daily candle is what will determine the direction I would follow this week. This daily candle. Now, after the formation of this candle, if I apply, or let's go to 4 hour. Okay, let's go to 4 hour. So on 4 hour, you see what we have on 4 hour? Can you see this? Can you see this support level? Can you see the rejection from this support level? This tells me USD-CHF is set for buy. It tells me USD-CHF is set for buy. But let me apply the zigzag indicator. If the zigzag is below this candle, if the zigzag appears below this candle, that is a confirmation that USD-CHF will be bullish this week. So let me just apply it. I know there should be a zigzag at that level. There should be zigzag at that level. I know it must be there. It will be there. So you can see zigzag below a bullish candle, and also this level was the previous support. So we can call this double bottom. This is double bottom. So if I'm buying USD now after the formation of this, I wouldn't just jump in and start buying. After the formation of this bullish candle, I want to go down to 1 hour, 15 minutes, 5 minutes, or 1 minute time frame to identify a fair value gap. Okay, so I wouldn't just jump in and start buying. I want to get into this trade at a very good price, because if I buy from the current market price, my stop loss will be few pips below this level. So I'll be risking like, let's say 30, 35 pips, which is not much. It's still within my risk parameter. Okay, I told you I don't risk more than 40 pips. So I could still enter a buy trade because it's within my risk parameter, right? But if the difference from this point to the low of this candle was about 60 to 70 pips, I would wait for price to pull back at least to a discount level before I buy. Okay, so let's go down to lower time frame to identify fair value gap. Let's go to 1 hour first. Okay, this is the fair value gap on 1 hour, but I wouldn't work with this. Okay, because it's too close to the current market price. It's too close. So let me go down to I think 15 minutes will be okay. Let me work with 15 minutes fair value gap. Okay, so on 15 minutes, I think we have a very small fair value gap here. Yeah, so I prefer working with this fair value gap. Yeah. So I want to see price pull back into this fair value gap before I would buy. If you don't know how to identify the fair value gap, just pick your pick the Fibonacci to apply it, swing low to current swing high, which is this. Then wait for price to pull back into a discount, which is below level 50 before you buy. And you can see the fair value gap on 15 minutes is below level 50. So that would be the best area to consider buying. If we had used 1 hour fair value gap, you would see that that will be above discount or equilibrium. It will be at premium. And you cannot work with a fair value gap that is at premium. You have to work with a fair value gap that is at discount. So you can see if we work with 1 hour time frame, it's at premium, and you cannot buy at premium. Best area to buy is discount. I hope that is clear. I hope that is clear. So that will be all for tonight's session. If you have any question, you can unmute your mic. Good evening. Do you have any question? If you have any question, just unmute your mic.
Yeah, good evening, sir.
Good evening, Mr. Emmanuel.
Yeah, first I requested for analysis on USD chef.
And that's what we just did, right?
Okay. Now, AUD USD.
Yeah.
I noticed that while you were doing the analysis on the 1 hour time frame where the trade, where you said if you had bought earlier after that formation of, I think, a doji, that 1 hour time frame does not support the 4 hour time frame, which was a higher time frame in that case, because the 4 hour time frame indicate give us a signal to sell.
Yeah, doji. Okay. So after the formation of the doji, what do we have on 1 hour?
On 1 hour was a buy signal. So
why do you say it's buy? This is we are 1 hour time frame. You can see the chart, right? this is 4 hour. We had a doji here. Then 1 hour. This is what we have on 1 hour. Are you here, Mr. Emmanuel?
I'm with you, sir.
Okay. So why do you say the setup on 1 hour contradicts what we have on 4 hour?
Sorry, on 4 hour. Let's go back to 4 hour.
4 hour is doji.
Now, on 4 hour is a doji.
Yeah.
Which indicates change in trade.
Yeah, from bullish to bearish.
From bullish to bearish. Now, my expectation is that if we get to 1 hour,
yeah,
we should have indication to sell the market, not to buy.
So what do we have on 1 hour? Is it buy or sell?
Okay.
Is it buy you're saying or sell?
Yeah, it's sell now. I can see it's sell.
Okay, so now what we have here, we have candlestick pattern here confirming that there's a change in trend. This is a spinning top. And after the formation of a spinning top, you're supposed to wait for the next candle to close bearish before you sell. So after the formation of this spinning top, the next candle closed bullish. We can't sell. It is after the close of this bearish candle we would consider selling. Okay, now let's go to lower time frame. Now we shouldn't just jump in and start selling. We should go down to 15 minutes, 5 minutes, or 1 minute time frame. And on those time frame, we should ensure that there is a break of structure or there is a change of character on those time frames, or there's a shift in market structure on those lower time frame. Are you getting what I'm saying? So let's go down to lower time frames. If there is no break of structure or change of character on 15 minutes, 5 minutes, or 1 minute, it will be risky to jump in and start selling at the current market price. So let's go to 15 minutes. What do we have on 15 minutes? Break of structure will occur here. Are you with me? Break of structure would occur here. So if you are considering selling, you can't just jump in and start selling at the current market price. You have to wait for price to break this low. That's on 15 minutes. Let's go to 5 minutes. On 5 minutes, we'll still work with this on 5 minutes. Okay, same price must break this low before we consider selling. Please don't just jump in and start selling Australian dollar USD. Wait for a candle to close below this low. Let's see what we have on 1 minute. Let me need the chart to loading. Okay. So this is what we have on 1 minute. I think on 1 minute, by 1 minute, there was a change of character at this point. There was a shift in market structure at this level. Maybe this candlestick broke out from this lower high. Sorry, higher low. This higher low. There was a change or shift in market structure. So, like I said, we should wait for price to close below this support, this low, before we sell. That's my take on Australian dollar USD. Don't sell at the current market price. Wait for price to break this level. If you are selling below this level, your stop loss should be a few pips above this level, which I believe will be less than 30 pips. This is 13, so your risk should not be more than 25, 30 pips on this trade. So So if I'm selling, I'll be targeting this level as my take profits. This is where I will target this level. Will be my TP level. I hope that is clear, Mr. Emmanuel.
It's clear, sir. Thank you.
Yeah. Does anyone have a question? Mr. Steven, Mr. Bolaji, Chiboy. Do you have any question?
Hello, sir.
I can hear you, Mr. Steven.
Oh, sir.
I can hear you.
I joined late. I don't know whether you have done an analysis on gold.
Yes, we've done that.
Okay.
I'm looking for sell opportunity on gold. The replay will be available. I'll drop it on the page.
Okay.
Sure, boy.
Hello, sir. Good evening.
Evening.
I'm sorry, on gold aspects. That's
Yeah.
what I want to know.
Okay. Do you have any question on gold?
Yes.
Okay.
Please,
What's the question?
the 4 hours candle, last 4 hours candle. The thing
Let's
is,
look at it. Let's see it. The last 4 hour candle on gold.
hello?
Yeah, I can hear you. Okay.
You know, you like what you say you need to wait for the next candle to broken before we can estimate sell.
Yeah.
You know, sometimes market can be funny that from that aspect like that, you still be continue buying.
Okay. Instead of selling, right?
Instead of selling, yes. Market can be funny like this one you explained is so clear, but sometimes market will just be so funny like the thing will still continue buying. So I want you to give me a little explanation. How can somebody wait, or you just estimate the market immediately like that after the next candle?
What we have here now, like I said, this is a bearish setup. Anything that makes price breaks this high or this high.
Okay.
Anything that makes price breaks this high or this high, that sell bias has become invalidated.
Invalid. Okay.
So if I'm selling from the current market price, my stop loss should be at this level or this level.
Okay.
So anything that makes a candle closes above these highs, then you could see more. We could see more bullish move on, on gold.
Okay, sir.
Do you get it? But what we are seeing now is what we are working with.
Okay.
Yes, we are not trying to predict what will happen next month or what will happen the next 5 months. It is what we are seeing now.
Presently.
Yeah, we're working with.
Okay, sir.
Okay.
Yes, it's clear, sir. Thank you.
So just have your bias, do your analysis. Once you've defined the trend of the market and the market gets your area of interest or point of interest, execute the trade, set your stop loss. That's just it.
Okay. Thank you, sir. Thank you so much, sir.
Trust your system. Trust your analysis.
Okay, sir.
Trust your analysis. Once you see the setup, execute flawlessly. Okay, execute it flawlessly. Set your stop loss. It is when you don't use stop loss, you take high risk. That's when you are come to get blown. I believe some people last week, most people would have their trade on Australian dollar USD. Probably they are still holding their trade. They were hoping that Australian dollar USD would sell. That was my expectation on Australian dollar USD last week. But it bought. It bought. So if you know the trade has gone against or is not going in your direction or the way you predicted it, exit. You shouldn't risk more than 30, 40 pips. If a trade goes against you 30, 40 pips, know that you are wrong.
Okay, sir.
Just know that the market is going against your prediction. Exit. Wait for the next opportunity.
Okay, sir.
But most people don't do that. They will hold on to the trade. They will leave the trade running until their account will blow.
Okay.
That's why 90 to 95% of traders fail.
Okay,
You
sir.
are wrong. Accept that you are wrong. Wait
Sir?
for the next opportunity. I say when you are wrong, accept
Yes.
that you are wrong.
Yes, yes.
Mm.
Thank you. Thank you
Okay.
so much.
All right. Any other question?
Excuse me, sir.
Yeah.
Please, if you look at this spanning bottom, which indicates changes,
Yeah.
you know, ideally, because for someone to have entered this trade
Yes.
and make to buy as an enter for a buy and then make this profit, that
Yes.
person must be an aggressive trader, I guess.
Why did
Because
you
for
say
me,
so?
because ideally, after the close of this spanning
Spinning
bottom,
bottom.
yes, one is supposed to wait for a candle to close bullish before he enters.
No. Unless
No.
the body of the spinning bottom is bearish. That's when you
Yes.
wait for the next candle. But since
You go
this is
bullish.
this
It's
confirms that
bullish.
there are buyers in the market. We have
Market. More
yes.
buyers.
When it is bearish, you would wait for the next candle. But if it is bullish, you can jump in and start buying.
Okay, sir.
Based on the
But now,
fact that before this candlestick formation, we had an inverted hammer. So normally price should have moved from this level. Do you get it? Price should have moved up this level. But they know that a lot of retail traders would have jumped in and have their stop loss at this level. So what they did first was to clear the stop losses at this level before price started going up. And that's why I always advise that when you are setting your stop loss, for example, if you had entered buy from this point, your stop loss should be like 10, 15 pips below the low of these candles, because they would want to hunt for the stop losses at this level before pushing price up. Do you get it?
yes, sir. Now, sir, after this doji,
Yeah.
my expectation was for us to go a time frame lower than this to find our entry.
After this spinning bottom?
Yes, after that spinning bottom.
Yes. After
I
the
expect that
formation of the spinning bottom,
yes,
you could
I
go
expect that
down
we should
to, this is weekly, right?
maybe one time frame lower to find
Let's go
our
to
entry.
let's see what we have on daily. So you can see on daily, see what we had on daily. This is an hammer, right? Right? This is an hammer.
Yes.
So if you go down to, after the formation of this hammer, let's go down to 15 minutes. Sorry, 4 hour. What do we have on 4 hour after the formation of that hammer? So do we have a fair value gap here? Can we identify a fair value gap on 4 hour? I can't find any on 4 hour, right? I can't find any fair value gap. Let's go down to 1 hour. I believe this movement was to fill a fair value gap. This pullback was to fill a fair value gap. So let's go down to 1 hour. Can you see this on 1 hour? Can you see this fair value gap? So I think that was the gap. This gap. We have this. This. Can you see this gap? This. Can you see this gap? That was the reason for that pullback. Can you see it? Can you see it? So that was the reason for that pullback. So after this gap got filled, one would have entered buy after the formation of this candle, right? Because here we had that hammer, the next candlestick, and this is a bearish hammer. So before we jump in, we'll wait for the next candlestick to close bullish before we buy, right? So after the formation of this hammer, the next candle closed bearish. We can't jump in and start buying. Then this candle closed bullish. This is where we would have entered buy. And if you are buying from this point this is where I will set my stop loss. I wouldn't set it at this level because they may want to hunt for this level, but it will be difficult for them to hunt for this level. So my stop loss will be first at this level. This is where I'll set my stop loss. This is high. This is 66 pips. So my stop loss, like I said, 40 pips. My stop loss will be around this level. Okay, my stop loss will be around this level. Then will be adjusted to this level after the market breaks out from this resistance. That's when I will adjust my stop loss to this level. But at first, it will be at this level. Oh, sorry, 40 pips, like I showed you, to be around this level. So immediately price breaks this previous resistance, I will adjust my stop loss to this level. How that is clear?
It's clear, sir. Thank you very much.
So that will be all for tonight's session. I appreciate you all for your participation. I wish you all a profitable trading.
Thank you so much.
Question? I believe you all are on the WhatsApp group, right? You're on the WhatsApp group. So if you have any question, drop it on the WhatsApp group. Okay? Have a wonderful. Please, as you trade this week, apply stop loss on all your trades. If you don't know the risk on a trade before executing, please don't execute the trade. Please don't execute the trade. Always know the risk before you execute the trade. Trust me, if you play by that rule, you will definitely be profitable in the long run. You will definitely be profitable. Okay?
Okay.
Good night.
Nice, sir.
Thank you, sir. Good night.